Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to find the real story. And today we're looking at Bridgewater Bankshares Incorporated, a company that might just be trying to sell us something new. So what is going on with Bridgewater Bankshares Inc. today? Well, they filed an 8K, which is basically a report for big important events that happen between their regular financial updates. Think of it as a company's way of saying, hey, pay attention, something just happened. The main event here is that Bridgewater Bankshares and its subsidiary Bridgewater Bank have inked a deal with Piper Sandler and Company. This isn't just any deal, it is an equity distribution agreement. What does that mean in plain English? It means Bridgewater is planning to sell up to $50 million worth of its own stock. They're going to use Piper Sandler and Company as their agent to sell these shares. How will they sell these shares? They plan to do it through what is called at-the-market offerings. Imagine a company selling its stock directly on the stock market in small batches over time. They can also sell shares through other methods like private deals or block trades, if they and their agent decide that is the best way to go. Bridgewater gets to call the shots on how many shares they want to sell when they want to sell them, and what the minimum price will be. They are essentially creating a way to raise capital flexibly as needed. It is like having an open tap to sell their stock when they think the price is right or when they need the cash. Now, for the cost of doing business, they're paying Piper Sandler and Company a commission of 2.5% of whatever they sell. So if they manage to sell all $50 million worth of stock, that is a cool $1.25 million for the distribution agent. Plus, Bridgewater will cover some of their expenses. Like any big agreement, there are the usual legal protections set up. Bridgewater and its bank lay out promises and conditions. Piper Sandler and Company also has things they need to do and conditions they have to meet. It's all there to make sure everyone is on the same page and protected. Here is a key point. Bridgewater is not obligated to sell any shares. They can also stop the whole selling process anytime they want. The distribution agent can also pause sales. This gives them a lot of flexibility and control over when and if they raise this money. So what will they do with this money? They're saying it is for general corporate purposes. This is a pretty broad category, folks, and can include a lot of things. They might invest in their subsidiaries, use it for day-to-day operations, spend on new equipment or buildings, buy back their own stock, pay off debts, or even fund new acquisitions. It's basically saying they'll use the cash for whatever they deem best for the company's growth and stability. Looking at their securities, they have common stock, which is the usual kind of stock that gives owners a piece of the company. They also have depository shares, which represent a portion of their preferred stock. This means they have different ways of raising money and different types of shares outstanding. Their common stock trades on the Nasdaq stock market under the ticker symbol BWB. This is the symbol most investors would use to find and trade their shares. The company's IRS employer identification number is 26-0113,412. This is like their social security number for tax purposes. Their main office is located at 4450 Excelsior Boulevard, Suite 100 in St. Louis Park, Minnesota, zip code 55416. This is where the company's core operations and management are based. Bridgewater Bankshares is stating that they are not an emerging growth company. This means they are probably more established and have met certain size and reporting criteria that exempts them from some of the less stringent reporting rules for newer companies. Overall, this filing is all about flexibility for Bridgewater Bankshares. They are setting themselves up to potentially raise a significant amount of cash by selling their own stock. The at-the-market offering strategy means they can do this in a measured way without disrupting the market too much. The broad users for the proceeds suggest they have plans for growth, whether through internal investment, acquiring other businesses, or strengthening their financial position. However, as with any stock issuance, it means more shares will be out there, potentially diluting the value of existing shares if the proceeds are not used effectively to increase the company's overall value. Their ability to use this facility will depend on market conditions and investor appetite for their stock. It is a proactive move to ensure they have capital available for future opportunities or to navigate unexpected challenges. Alright, that is our breakdown of Bridgewater Bankshares Inc. Its latest filing. What is your take on this move? Do you think they have solid growth plans that justify selling more stock, or does it signal potential financial needs? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate finance. Don't forget to check out the Discord link in the description for more discussions. Thanks for watching. See you next time.